Cam for Cam's Mortgage Minute on Wednesday, April the 17th. Hey, one question I get asked a lot is, should I be remortgaging now? Is it a good time? Well, with rates where they are, yes, it can be a good time, but there's more things that we have to consider. We have to look at what your penalty is to pay out your existing mortgage. Now, on that penalty thing, I'll just mention a couple things to you. A lot of times when I tell people what the penalty looks like, they get, especially when it's a large number, they certainly are not happy and they're not thrilled. And that's what precludes them from wanting to do anything, because they say, look, this penalty is just too large. But what I always point out to them, and what you need to understand out there, is that one way or the other, you are paying a penalty. So let me explain what I mean. Let's say that your mortgage currently is at 4.5%, and the best rate you could get is 3%. Well, when the lender calculates his penalty, he uses a little thing called IRD, interest rate differential, and we've talked about it before in a previous Cam's Mortgage Minute. But in a nutshell, what it basically does is it allows a lender to recapture the money that they're going to lose paying your mortgage out and relending the money at lower funds. Now, with that number, we have to compare it to what the new rate is going to be for your new mortgage, and if there's a savings there. And we run the math. So at the end of the day, if you can suddenly go from 4.5% down to 3%, well, you're saving that money. So in essence, you're recapturing your penalty back. But if you leave it at 4.5% when you could get 3%, you're effectively paying the penalty on a monthly basis, just not all up front by paying it out. But bottom line is you're still paying a penalty. Now, the other times that we look at these sorts of things when they make some sense is possibly for paying out existing debt. You might have a lot of other debt, and by paying out basically remortgaging and taking the extra cash out and paying that debt out, it may leave you in a much better position cash flow wise. Now, if you're going to do this, the smart thing to do at that point is to compress your amortization as well on your existing mortgage, so you don't just take that extra cash and spend it somewhere else, but you effectively make it work for you. There could be an investment opportunity, there could be RSPs you want to contribute to, there could be a renovation you want to do. Bottom line is, no matter what you're looking at, you've got to approach it from let's look at it from an analytical point of view, crunch the numbers and see if the math makes sense. If at the end of the day the math is going to make sense, it's going to save you the money, it's going to allow you to accomplish the goal that you're after, improve your life, and remedy a situation, then it's worth it. And that's where somebody like ourselves comes in. At the Auxilium team, we're happy to crunch those numbers with you and for you, and we'll give you all the different options that are out there. Because at the end of the day, we want you to make the best decision based on the best information. And that's primarily our job, and that's what we do as mortgage brokers. So if you're looking for this, or you need some assistance with a remortgaging, refinancing, you want to know what your options are, you want to know what your costs are going to come in at, and you want to see if it truly makes sense, give us a call. As you know, rates are historic lows. I mean, I say it all the time, and they are low. And we'd be happy to assist you with that sort of thing. So you can reach us at the Auxilium team. It's been Cam the Mortgage Man, and I will see you tomorrow.